Hello guys, welcome back to the channel. This is King Joe of Wall Street. I want to thank you guys for the engagement on my last video. It was crazy and amazing. So in this new video, I'm going to be showing you guys what you should do whenever you hit a stop loss, what you should look out for after you lost a trade, because price is probably heading to a setting that I'm going to talk about in this video. So make sure you like and hit the subscribe button for more content like this, and without wasting much of your time, because time is money. I can't waste your money. So let's jump into the video straight up. Welcome back to the channel. Welcome back. Hope you guys are doing well. Let me make my screen full so that we can quickly dive into the reason for this video. So I took a trade last week on USD card. That's US dollar versus Canadian dollar, and then I took a little loss, which I later identified the reason for my loss and where price headed to immediately after that. So I'm going to also come back and do NFP review. Yeah, I'm gonna do NFP review shortly. So this week was a bad trading week from the start, but ended up good because on Friday we caught a certain move that made us some little amount of money on our challenge account. I'm always doing challenge accounts. I've not gotten to real accounts yet, but very soon we're gonna be doing real accounts. So I'm still looking for USD card. I don't know where this USD card went to. Okay, now we are there. So this is what I'm talking about. From here, I knew that price was already bullish, but I didn't know where exactly price was heading to. And as you can see, let me step down to a lower time frame a bit. I think I took this entry from the 15-minute time frame, and from this point, you guys always know the model I always talk about: structural liquidity and POI. So this is my structure here, right? I know we're bullish already, so we have higher highs, higher lows, higher high, higher low, higher high, higher low. This is the next higher high here, right? But before that, we had this equal high, and then a sweep of this previous low, then a break of structure. But before market broke structure, it gave us this structural liquidity and break. So I expected price to come into this zone and we buy from there. I already did a 1 to 3 risk to reward ratio, but price actually took us out because price actually created all these lows as liquidity, and I got angry and left the trade. Just want to come back later to see that price actually respected an order block that is at this zone. I think I saw this order block. Was it in 30 minutes? Let me check. Oh yeah, from the 30 minutes you can see this order block. Okay, good. I actually took it from the 60-minute time frame. After price took us out, I got angry and I left the chart. But what I learned from this trade is that you need to identify what is the next point that price is heading to. What is the next POI that price is heading to before a continuation to the upside? Because obviously price is always going to come back and break this structure because we are in a bullish trend. So after price hit my stop loss here, I got angry and I left. Meanwhile, price came back into the zone. You can see this is the order block that caused this break of structure. Another block in a bullish environment is the last bearish candle before a strong bullish move. In a bearish environment, the order block is the last bullish candle before a strong bearish move. So this is our last bearish candle before this strong bullish move. And normally when you're taking your order blocks, you don't take your entry from the top, from the wicks at the top. You take the entry from this body of the candle. Let me zoom it out so that you can see what I'm saying. You always take your entry from this body of the candle, not from the wick. If you see anybody taking another block from the wick, then the person is taking it as a supply area and not another block. Other blocks are usually taken from this point. Okay, I hope I've made myself clear. Now, what price did here, as you can see, price took us out and then started creating liquidity. And even when price came here, you can see it didn't tap into the other block yet. It just came and then was creating this low because a lot of people are going to be buying. Then price now use this candle here to take everyone out of the trade. That was when price respected this other block, and because this is just liquidity, let me draw it out. This is just liquidity waiting to be taken out. So a lot of people jump into the trade from this point, and I'm sure they were stopped out. Like, I'm sure about it, they were all stopped out before price moved. So the market always seeks for liquidity before it makes a movement. So whenever you're trading, make sure you identify where liquidity is so you won't be used as a liquidity. And after price took out this liquidity by respecting this other block, I don't know why this deleted. By respecting this other block, we saw a strong bullish movement, like a really strong one. And normally, if you took this type of trade, your own target is going to be this break of structure, because this is obviously the next break of structure or higher than it a bit. But price actually did a good job by getting us even to. It took about 2 days to play out, let me just say, because this is a 1 hour time frame, so every candle here took 1 hour to form. So the lesson from this video is simple. Whenever you take a trade and you're sure of your buyers and you hit stop loss, immediately start to identify what next point is price going to react from. Okay, so I forgot about the NFP review. I think let's start that NFP review now. So this was where I took the NFP trade from. Let me zoom in. Yeah, as you can see, this is where we took the NFP trade from, and I knew that price is about to buy because US dollar was supposed to be pumped. So I draw this other block, right, that caused this break of structure, and then the moment price tapped into it, boom, TP hit. And then this was the first one. I think I also took another on, I took on different pairs actually. This one we took on GBP, and price sold up from here to here because I mean dollar is going to be pumped, so dollar became strong from this point to this point. Then reduce this because this NFP, and then some of my NFP trades actually went into the loss. For, like you can see, this one I didn't know which of them is going to be pumped. Actually, this was where the exact NFP happened. This one candle that you see, it just manipulated here, manipulated down, and then there was no particular move, and then we went out. So basically that was just what happened. Yeah, same thing with this. I'm expecting this to still sell to this point, but because of the news, you can see we had rejections from here and price couldn't break out, but news just caused this stop. Like, this really pained me enough, but no problem. We're going to take another entry next week from this point coming down here. This for Euro NZD. GBP card. Did we take anything? Okay, I can't even remember this before I entered this trade. But this particular one was just a low, a high, a sweep, a structural liquidity, break of structure, tap into it, 1:3 TP hit. Can't always win in this, but do your best and hit that 80% win rate. If I even 50% win rate is enough, I'm also gonna do a review on that as well. So guys, and then this point, this is why I took this trade is very simple. If I go to the 5-minute time frame, you're gonna know it. I use what is called a QMR to take my entry. Quasi-modal reversal. I've talked about this in my previous videos. I'm also going to talk about it when my mentorship starts. And the mentorship is free, so just subscribe to the channel so that you're going to see it. So this is an order block, and then price expected to come into it and buy, but price disrespected it, so it's a failed order block. That means the next time price comes back to the order block, we're gonna buy from there. And you see, this was 1:17. TP was hit. So Not complicated, just make your trading simple, and then always apply proper risk management. That's why it's not just called risk management, it's called proper risk management. So hello guys, welcome back from my screen. I hope you learned something today. Even if you didn't learn a lot, maybe you have a lot of training experience, but at least I'm sure you learned something today. So please make sure whenever you lose a trade, don't just get out of the market. Stay down and watch for what point market is heading to, and then make sure you have a tight stop loss so that you're not taking out. It is either sniper entry or it's nothing. So you can see this is my screen we just came back from. In case you took it here, this kind of trade you might lose it, but you wait for it to come down. I hope this catches what I'm showing though. So the thing is, we have to just keep on showing up every day, because there is no force on earth that can stop the man that shows up every day. Proverbs 22:29 says, if you see a man that is diligent in his business, is going to stand before kings and not ordinary men. So make sure you subscribe to this channel, and if you want to link up with me, I'm totally available right now. I'm looking for people that we can link up with. Maybe you have trading experience, just hit the link in my bio, send me a DM on Instagram, and that's all we're connected, so that we can run this race together and build a community of people that are running this race really fast. And then help me hit the subscribe button so that we can hit 10k subscribers by December. As you can see, this is my logo. I'm still gonna be showing that on every of my videos. So thanks for watching without wasting much of your time. Hit the follow button. Let's go. Thank you very much. See you later at the making job of Wall Street. Peace.